Welcome back to the Probate Real Estate Podcast. I'm your host, Tony Gilliard, attorney for over 2 decades and a realtor specializing in probate listings here in Charleston, South Carolina. If you've recently inherited property, you're likely navigating a lot of new information. One of the biggest concerns I hear from heirs is, what am I going to owe in taxes when I sell this house? Today, we're breaking down capital gains tax on inherited property in South Carolina. The good news? The tax rules are actually designed to work in your favor, especially if you act quickly. Let's start with the single most important concept you need to understand. That concept is called the stepped-up basis, and it can save you thousands of dollars. Here's how it works. When you inherit property, your cost basis, the number used to calculate your gain or loss, is not what your loved one originally paid for the house. Instead, it's stepped up to the fair market value of the property on the date of their death. Let me give you a real-world example. Imagine your loved one bought a home in Charleston 30 years ago for $100,000. At the time of their passing, it was worth $500,000. If you inherit that home and sell it shortly after for $500,000, your capital gain is calculated as $500,000 minus $500,000 equals $0 in capital gains tax. You pay nothing on that $400,000 of appreciation that happened during their lifetime. That's the power of the stepped-up basis. But what if you hold on to the property for a while and the market goes up? If you hold the property and sell it later for $550,000, you would only owe capital gains tax on the appreciation that occurred after the date of death. That's the $50,000 increase from $500,000 to $550,000, not the full amount. This is why timing matters. The sooner you sell after inheriting, the lower your potential capital gains tax liability. For heirs considering selling an inherited property, this is a crucial factor to discuss with your realtor and tax professional. Now, there are 2 other important tax facts specific to South Carolina that are very favorable for heirs. First, South Carolina has no inheritance tax and no state estate tax. That means the state of South Carolina will not take a cut of the property's value when it passes to you. You only need to worry about potential federal taxes, and that only applies to estates valued over $13.99 million. For the vast majority of Charleston heirs, this is not a concern. Second, if the property was the deceased's primary residence, an additional benefit may apply. For primary residences, an individual can exclude up to $250,000 of capital gains from the sale, and married couples filing jointly can exclude up to $500,000. This exclusion can potentially eliminate any capital gains tax liability on the sale, depending on the property's value and how long the deceased lived in the home. Now, let's cover a few additional taxes you should be aware of when selling inherited property. While capital gains tax is your primary concern, there are other closing costs and taxes to factor in. First, the real estate transfer tax. In South Carolina, this is typically paid by the seller at closing. The current rate is $1.85 for every $500 of the purchase price. For a $500,000 home, this would be about $1,850. The transfer tax is not deductible from your income taxes, but it may be added to your cost basis, which can help reduce your capital gain. Second, income earned from the estate or trust. South Carolina taxes the income of estates and trusts at the state's top individual income tax rate, which was 6.4% for 2023 and is 6% for 2025. If the estate earns income during the administration period, for example, from rental income on a property before it's sold, that income could be subject to state income tax. These are just a few of the costs to keep in mind as you plan your sale. To summarize, here's what I want you to remember. The stepped-up basis is your friend. It resets the property's cost basis to the value on the date of death, significantly reducing your potential capital gains tax. South Carolina has no inheritance tax. The state won't tax the property's value when it passes to you. Selling sooner rather than later minimizes capital gains. The less the property appreciates after the date of death, the lower your tax liability. Consult with a tax professional. Every situation is unique. Your realtor and your CPA can work together to help you structure the sale for the best outcome. Navigating probate and real estate can feel like a lot, but you don't have to do it alone. If you've inherited property in the Charleston area and are thinking about selling, I'm here to help. Visit my website at GilliardGroupElite.com to download my free probate real estate guide or to schedule a consultation. The information provided is not legal advice or tax advice. You should always consult with the respective professionals. I have a network of professionals I can refer you to. I'm Tony Gilliard. Thanks for watching, and I'll see you in the next episode.